The Internet of Things is composed of sensors. Everybody familiar with a sensor? How many people of you have cell phones? Okay, you have sensors on you. So there are sensors. These are little devices. They go on and off. They tell you, they communicate where you are, what you're doing, how fast you're doing it. Fitbits are sensors. These sensors then send data to places where they store data, otherwise known as data stores. Those data stores then can interact with analytic engines to consume the data, to make some sense out of the data, and most importantly, be able to go back to the sensors and tell them what to do. This is a slide from Cisco talking about the Internet of Everything, the Internet of Everything, Internet of Things. I see them as the same thing. So they're saying that 37 billion with a B, new things will be connected by the year 2020. So lots of stuff happening. Stretching that out to 2025, one of my favorite years, as Wendy has told you. The same Cisco is saying that there's going to be in excess of 100 billion connected devices, not just sensors, devices, and that is going to involve over 1 trillion sensors. They are also suggesting, this from a different source, I don't have the source, that by that point in time there's going to be 4.8 billion hyper-connected people. I'm not sure what hyper-connected means, but you get the kind of message. In other words, this is going to be part of the fabric of our new connected world. That's all that means. This is the new fabric that we're working with. So, there are personal things with regard to insurance. Allstate Canada, as you probably know, is offering a 25% discount for if you put Rogers home or smart home monitoring devices in your home. They're offering a 25% discount on homeowner stuff. That is all part of the Internet of Things because it's being monitored. Rogers will tell you, didn't lock the door, didn't do this, the water's running a bit too much, those types of things. There's an organization in the US, Brian probably knows them a little bit better than even I do, American Family Insurance. Brian, you're probably familiar with them. They're they're a captive agent writer. But they're doing some similar things, but it goes a little bit further. They have partnered with Microsoft to put together an accelerator. An accelerator is kind of a place where entrepreneurs go and they get a bunch of advice and stuff like that to build new technology. And they're providing equity financing for startups doing home automation. Why? Well, their public statement is to make policyholders' homes safer. We'll talk a little bit more about that. In the commercial lines business, property managers have been using sensors for a long time. My partner at Insurance Canada, Doug Grant, reminded me on the way in this morning, this kind of Internet of Things for people who do large commercial underwriting is really not a terribly new phenomenon. We've been monitoring factories for a long time. So factory mutuals have done this for a long time in collecting the devices. Not using the internet all the time, but doing the same sort of philosophy. HVAC manufacturers use it for the air conditioning and the heating. The manufacturer Train says that they can resolve problems 30% faster, they reduce the risk of fire and water damage, and transform their own business model to service away from product. And it is changing, the Internet of Things, we believe, is changing the business of insurance. It's changing risk profile. We're going to get back to American Family in a second. Making things safer is wonderful. It also reduces our revenue. It also is making things a little bit cyber riskier. Think of 100 trillion devices out there floating around telling people what you're doing, where you're doing it, and who you're doing it to. There's going to be changes in product, there's going to be changes in organizational profiles. The Internet of Things does a nice job on alternative risk financing. So if you're trying to monitor storms, the recent IBM announcements about partnerships with the Weather Channel, bringing stuff in, things start to look a lot more like warranties. And you're going to have usage-based everything. Fewer underwriters, more data scientists. The Internet of Things is really an implementation in telematics, and we're starting to see those being used for autonomous vehicles. Again, putting pressure on premiums. And again, changing the business model. Back to American Family for a second. American Family is investing in that technology to replace the premium income they're going to lose by making the home smarter. So they're changing what business they're in too. They're broadening it, and there's others, they're talking about that. We're going to have some questions. We'll be welcoming questions from you throughout the course of this, but the people who are really smart and are going to be helping resolve the questions are the panel here. On my immediate left, to your right of me, Clinton D'Souza from Deloitte, Colin Simpson from the IBAO, Deb Olsen, who didn't have to move, from ingenie, Kim Opheim from Applied Systems, and Hugh Fardy from CG&B.
3 case studies where basically it is reality in terms of P&C. And the Internet of Things, I guess, is going to be impacting on the connected car, connected home, and connected self. So the case studies involve those 3 things. So one of them is a insurance company called Discovery Insurance in the U.S. Actually, it's a South African insurance company. They operate in the U.S. and in the U.K. and in Singapore. They're a life insurance company, and what they've done is basically they provided their policyholders under a program called Vitality connected devices, wearable devices. And every time you go to the gym, every time you jog, every time you do some physical exercise, they get the data, and that goes towards basically giving the policyholder a discount in terms of their life insurance premium. Now, how does this come into P&C? Well, last year, Discovery announced a strategic partnership with Cambridge Mobile Telematics in the U.S. And what they are planning to do down the road is have that one customer view where they can integrate that customer data from the life insurance into the customer data from the P&C perspective. The second case study is with State Farm US. So State Farm US last year basically announced a strategic relationship with AT&T and Iris. They are home monitoring systems in the US. And just to back up, State Farm average claim last year on home insurance was about $35,000. And the relationship that they have with these providers is basically to provide their policyholders a discount if they sign up with those firms that monitor the homes, will monitor obviously the heating systems, etc. And the policyholders will be able to leverage discounts from that relationship. So what it does give State Farm is better improving data on the customer, better product in terms of how to target those customers in terms of specific products that they can target. The last one is a company called, insurance company called Climate Corporation. Climate Corporation is an insurance company that was acquired by Monsanto. Monsanto is a large agricultural firm, and they acquired Climate Corporation, who basically underwrites hail insurance in the U.S. and crop insurance. And what Climate Corporation does is they provide to farmers true sensory devices to monitoring weather and satellite systems, etc., data to those farmers in terms of their insurance policies. So for example, they will have, if they know that there's going to be a bad weather-related event, their policyholders would get notification prior to that event that adjuster will be deployed in your area for this type of event. Growers and agents receive basically potential yield losses that are detected by Climate Corporation as part of their insurance program. So they're being proactive, they're basically using the data to gain from a customer experience, helping those customers in terms of understanding and managing the risk. The
Climate Corporation is interesting. Does anybody know about Climate Corp? Read about it or anything? Do you know who started Climate Corp before they sold to Monsanto for $900 million? I think it was?
Tell us.
No, go ahead. Oh, two ex-Google guys. That was their background. They didn't understand this insurance stuff. They thought, well, if there's bad weather happening, we should just send out money to these people.
And I'm just going to add one thing. I don't think this is specifically in the US. From our perspective, we're starting to see this in Canada too, from insurance companies as well.
So clearly there's stuff that's happening. So telematics is a big part of this. Colin, perhaps maybe you can chat about this, but how is this information that's driven by the Internet of Things and telematics going to change some of the behavior and some of the activities of brokers and insurers?
Sure. There's quite an evolution taking place, as many of you are aware, as to where information comes from, the data that's collected, and how that is applied to what we understand today as risks and the pricing of those risks. So as more and more data is collected through the Internet of Things, the ability to actually price differently is going to increase. As the pricing increases and the information increases, then the way you have to respond to your clients is going to have to change. So the easiest example is on the telematics side. So we all understand that a box in your car collects data. That data is assessed, and depending upon your driving patterns, you're either given a break in your driving rate or you're not, as the case may be, or you may be segmented into a particular type of risk. But as a broker, you need to understand that. You need to understand the data, what it's going to get used for, and how does that change the risk profile that you're trying to provide advice on. It doesn't satisfy the customer anymore just to sell them the product. You have to be able to understand what's happening while they're using that product. Same goes whether it's going to be home insurance or whether it's commercial insurance. One of the interesting examples that I've heard, which is non-car related, which is on a property side of things, that if you understand an asset like your home, how is that asset being used and how does that affect the risk profile of that home? So you can quite easily imagine in the future with all the additional sensors that your home is actually sensitized to your actual movements, and then will that actual movement impact the risk? So for example, being in the home, does that increase or decrease the risk? Maybe it decreases the risk because the home's not being used and therefore is less at risk from personal damage. Maybe if you have a single family home with 15 people in it, the risk increases. And these sensors could tell how many people are in the home and what it's being used for. As a broker and as an insurance company, you need to understand how to segment your business, how to price it, and how to advise on your customers' needs and wants. Certainly, we spoke about this morning about your customers' value proposition, the value proposition that they seek from you. And I think that is something that you have to continue to reassess as we move forward. Both the insurance companies need to do it and also the broker network.
Okay, Hugh, perhaps you could comment. This has the change in behavior in the brokerage. What types of suggestions, advice would you be giving out on this?
Suggestions and advice. I always actually have a disclaimer first. I'm a fan of technology. I think it's a wonderful tool. I think we should be using the tool. We've got to be careful about the tool using us. I am the butt guy.
Yes, you are.
Okay? It's all wonderful, but we can't forget as brokers what our job is, what our responsibilities are. In Canada, brokers have a responsibility to advise, meaning we have to give advice to the customer through the purchase process. So we need to be in touch with them to do that. There's different ways of being in touch. It doesn't necessarily have to be verbal. But we're going to have to understand, as Colin said, we're now going to have access to a huge bulk of information that we didn't have before. We're going to need to be able to understand that information, sort through it, figure out what works for us in the job we need to do, make use of the right tools. We need to identify the client's exposures. Theoretically, with the Internet of Things, I'm going to know way more about some of my clients than I might even want to. But I'm going to know it, which means as a broker, I've got to address it from an insurance aspect. I've got to know what insurance products are available and how they apply. I have to present that kind of advice to my client. And equally important is I've got to recognize places where my client isn't going to be protected by insurance. And again, I'm going to have access to way more information. I find it a little bit cross-purposes sometimes when we talk about the digital method that we're going to be faced with in the future. We're actually working, in many experimental phases right now. Everybody I talk to, and it's been said many times today, talks about the importance of the customer relationship, customer contact, talking to them, exchanging information, et cetera, and yet we continue to talk about how do we cut down the number of times we talk to them. It doesn't make sense to me. I know there are digital opportunities out there today where you can quote, bind, issue online that have the capability of giving you all the information about a customer, and yet we're trying to figure out how do we get that to under 5 questions. And there are very few customers in our marketplace that we're going to know everything about with 5 questions. So if that's the kind of bulk we're going to work with, we got to find some way to match that to what job we're expected to do.
So the tool that most of us brokers use, your broker management systems, your commercial management systems. Kim, maybe you could kind of talk to what are some of the things that are going to happen with those tools that are going to help us respond to the changes that we're seeing.
You know, it's interesting having these conversations in the formative days, and I think it's the right time to do this. We've already talked about the huge amounts of data that we'll have. So brokers will need analytical tools that will help them wade through that data. We're building those deep analytic tools today. We'll have to refine them to deal with all of the data that will be coming from these sensors. The end game is to know your client better, as Hugh was mentioning. And if we know our clients better through the Internet of Things, we'll be able to have meaningful contact with them. So, you know, IBAO recommends 2.7 contacts per year, but it has to be meaningful. The Internet of Things should provide the data so that brokers can have that kind of contact and get the advice that customers need. There's an interesting example in the marketplace today with what one of brokers' competitors is doing with data. Now, it's not the Internet of Things data, but it's data and how they use it. So the example is Canadian Tire. Now, Canadian Tire has their own credit card, and they really want you to use their credit card and no one else's. And the reason for that is they comb through that data, and they try to develop a profile on their customers because they want to select the right customer to market their insurance products to, something else that they do. So one of the things that they look for is they look for customers who buy those little felt pads for the for the bottoms of your chairs and tables. And their logic is that if you're spending the money to buy these felt pads, you must care about your possessions, and therefore you're a better risk. So they take that information, they hand it over to their insurance arm and say, contact these customers because they should be better risks. So when I think of the Internet of Things, I think it's an opportunity to level that playing field for the broker. Because I don't know of any brokers that have a credit card arm today or are likely to have one in the near future. But by having access to data coming from your client's home, for instance. So a thought that I had was an automated inventory of household things that are connected to the Internet of Things. So all of their electronic items. So a service you could provide is we'll do this inventory so that we can make sure that you're properly covered for all these things. But at the same time, it helps you to understand your customer better. And so combing through that data would be one of the things that the BMS would be trying to help the broker with, so that they can turn that into those meaningful contacts.
So, Deb, you've had probably the most experience in working with systems to collect data that's for telematics. What do you see as some of the things that are working well for you now, and some of the changes you potentially would like to see happen with those tools?
I think that there's always the idea first to go to the BMS. That's your first thought, is to expand the BMS. But there seems to be an increasing trend that the data, the vast amounts of data collected by telematics, for example, go to an external system because it's just data. The external system turns it into useful information. So Canadian Tire captures everything you buy, but someone has to turn that little purchase of felt pads into a useful piece of information that useful piece of information may be the thing that gets passed on into your BMS or into the insurance lexicon of language and rating and all of that stuff. But it doesn't mean necessarily that you need to have a personal familiarity with all of the vast amounts of data or go to school and become an analytics expert or whatever. But you at least have to have an understanding and enough to take the handoff, essentially, to take the guys from Canadian Tire who come up with that insight and say, oh, I understand what you're telling me, and I know how to operationalize that and turn it into something useful for my business because it makes sense to me. So there's lots and lots of data out there. There is less useful information from combing through that data, and there is even less relevant insight that goes together with that data to understand it. So I guess what I say is there are experts in every chain, and so if your data is being collected and going to a large data store and being run through an analytic engine, you don't necessarily need to be the owner or the provider of that side of the equation to be successful and to win. On the other hand, if you have an opportunity to take that analytics, take it in-house and own it, which is what Ingenie had an opportunity to do, then you really do ratchet up the value that you provide as long as you can protect it in a proprietary way, but still function business the way you need business to run in the industry, in a collaborative way through lots of partners, because that's how we achieve insurance in our environment. We don't do it ourselves. We do it through a set of partners and a process that crosses system, crosses organizations all the time. The data is even more mobile than that. That's my...
So this, go back to Dr. No at the end there. This seems like an awful lot of exposure. You got a whole bunch of new data that's coming in. You got data that's not even resident in your own system. You're getting from another aggregating source. Like what are some of the things that brokers need to take into account when they're planning on working with this stuff?
Right now, something around 45% of the broker E&O claims we see in a year stem from a lack of customer knowledge. We don't know enough about the customer. That's now. We're seeing things like in the information gathering process, we default to asking only the questions that are going to matter in getting a price. With a growth in the information available, people are going to be able to say, we knew that about them. Why didn't we address it with their insurance? So we're going to need to have a closer look at the information we gather. We're going to have people or systems looking at it that are going to be able to identify answers to questions as indicators of other exposures that we're not even talking about. Something in the general questions, the general information we get from customers should be red flags to us. And we're having an issue with that. Sure, go ahead.
I just had a question regarding that. Even on the most simple level of telematics, let's say, you have a customer who agrees to put the device in. At best, they're going to get a 5% discount because they are aggressive, fast-braking, bad drivers. And now all of a sudden you have this information. You show that they drive 8,000 kilometers, but this device is saying they drive 30. Who's responsible for that information? And as brokers, where does our ethical line get drawn in the sand about giving that information back to the company when the company's saying, we're not looking at any of that. We just want to give them a discount if they're a good driver. We'll never use the bad info against them.
So do you want to summarize that, or Colin?
Well, let me have it.
So let's just repeat the question first, or you can.
So I think from what I understand it, there's a driver who sold a telematics product that gets the 5% discount. Is a terrible driver. You now know as a broker that they're a terrible driver. Then where is your responsibility lie in connection with what you do with that data and where your E&O sits. So from that perspective, the way the market is going here, that the data belongs to the customer. So it's the customer that determines what that data can and cannot be used for. So when they sign up for an insurance product, they will sign up to say that they only allow that data to be used by company A, which is who they have the insurance with. When they come back with a driving score, you should, as a broker, have access to that driving score so you can understand the driving patterns. At that particular point, you then advise them based on the information that you know about that driver, and maybe the telematics product is not ideal for them because they're not a very good driver. So he's going to pitch in on the E&O side from here.
No, I was the terrible driver.
Well, there you go. Okay.
That's why I don't have telematics.
Yeah. So, you know, given the fact that you have that information, the information still belongs to the consumer. So you are not in a position to give that information to anybody else. You're in a position to advise your client, and that advice is based on the risk profile that you understand. And it doesn't matter whether it's telematics data, whether it's data about their house, or whatever information you have to take that on board and advise them accordingly. I am sure as telematics evolves, as the Internet of Things evolves, E&O exposure is going to evolve. But as it stands right now, as clients sign up for these products, they sign waivers as to what the information can and cannot be used for, and that's what you have to rely on.
That's the current situation. I don't know what the contract is for the ingenie product, but you know, the Intact product, if you read the actual endorsements, the data is stored, can be stored in Canada, United States, and or Italy. Yeah. And once you're past Canada borders, that information, how your customer never knows what actually happens to it, how it's being analyzed, interpreted, and repackaged. And currently in Canada, because we're at the infancy of this, if you look over in Britain, I'm sure it was just last year sometime, that I heard that underwriters were now, and it's a different regulatory system over there, but underwriters now after 5-8 years, they're starting to use the data to actually surcharge. So, you know, I mean, let's not pretend this isn't going to come down in Canada and Ontario. It's coming. It's just a matter of time when the politicians actually change enough. Maybe it's 10 years, maybe it's 15 years. But we're going to get politicians who are now 30 years old. They're going to come and say, yeah, let's do it. Bad driver, surcharge.
So I think I'm hearing two questions there. One is the storage of the data in Canada and outside. The second is that the rating is going to morph as the data proliferates and becomes more useful. It looks like, Colin, you want to say something. I'd like to also ask Clinton's advice on a little bit of that stuff as well. Go for it.
Yeah, so as, I don't know if everybody heard the comments being made, but the Intact product has a certain third-party vendor that supports that product, and the data can be stored here in the US or in Italy. I think one question that is quite frequently asked here in Canada that you might not ask in other jurisdictions is, where is the data stored? One question that is very rarely asked is, where is the backup of that data if it fails? Because quite often it does get pushed out of the country when it fails. And it's not just housed in Canada. So quite often you may find that the housing's in Montreal, but you know the fail-safe somewhere in New York. That's just a question that you need to ask, whether you're comfortable or not comfortable with data being outside or otherwise. You also need to look at the small print for all of the insurance companies and the vendors that they use, because some of the vendors themselves, and this is why a lot of the vendors are in the business, have access and have rights to access non-personal data that's collected off these boxes. So the data is effectively getting duplicated. So you have to make sure that you understand what the technology does, how it's going to be used, where the data is going. You have to explain all that to your clients. Because if something does happen that the client wasn't expecting, then you'll be speaking to Hugh again. So, you know, there's a lot of complex situations. And what I think you'll find as things progress is that you will find, as we discussed earlier on, that brokers and insurance companies will start to specialize in these areas. We see it now. Ingenie, for those of you who are not wholly familiar with it, is actually a broker. they have sucked, like you described it, they suck out some of the rating of the underwriting elements from an insurance company, and they house them within the brokerage, which is very unusual. They do a great job at it because they specialize in it. We had the question around CRMs as to whether CRMs are dead. This is an ideal situation, an ideal example where it's even more powerful because they're actually using it to basically insource some of the risk and pricing decisions that an insurance company make in a brokerage. So I think it becomes more powerful if you can get more focus on the value proposition that you offer.
Yeah, I'll just talk to the data storage issue and support also Colin's comments. I think each insurance company is different, right? I think, you know, Intact does have that, obviously, stipulation where it can store the data outside of Canada. I think if you look at other insurance companies that are offering telematics cooperators, it's not like that. It's totally different. The storage of data has to be here. So I think each company is different, and I think the job of the broker is to explain that to each policyholder when you have that option.
And let's keep in mind with the where data exists or stored, we're dealing with the internet. If I'm sending something from here to the back of the room to somebody else's cell phone, the odds are pretty good it's going through the U.S. Just in case you're interested. On the commercial line side, just to take a diversion there for a second, it seems like there's a lot of risk management stuff that's coming along with this. Maybe talk to this if you could, Kim, on how are the broker management systems going to be supporting that kind of stuff on the commercial line side.
So a couple of thoughts. One is with warranties. We're all familiar with warranties on insurance policies. From an insurance company perspective, their only concern is at claim time, did you comply with the warranty? There's an opportunity for brokerages there to provide warranty monitoring services. So, you know, was the alarm system turned on? The Internet of Things would allow brokers to have access to that data stream if the customer agrees to that. But the service would be, the broker could reach back to the client and say, on 3 days in a row, your alarm wasn't turned on. You realize what could have happened if you would have had a loss. There would have been a claim denial. So there's a value added that the Internet of Things would bring to the table that brokers can't necessarily do today. When you think of robots, if you're a landlord, you can't really put a camera in your tenant's apartment. You get in trouble when you do that. I mean, some have tried. But think about the Internet of Things allowing you to monitor the humidity level in a home. That's really inobtrusive. Nobody really can complain that their privacy is being invaded if you're monitoring the humidity level. But it would be an indicator that perhaps something's going on that shouldn't be, or if something's happened to the power level or the power consumption. So that's data that the customer could use, the brokers could use to inform their customers and let them know that there's a potential or a problem there. I think another thing too, you know, when you think about, again, automated inventory, so for a manufacturing company that's a client of yours, the Internet of Things, they've installed a new machine. There's an opportunity for that data stream to be directed to the broker so that the broker knows that you bought new equipment, and then they can provide some advice services to you so that manufacturer can protect that equipment.
So we have about 5 minutes left. We welcome any questions, but maybe we could just turn to Debbie for a second, though. On the consumer side, put our happy face on now. What type of engagement opportunities is this stuff going to give brokers in working with their clients?
Well, I mean, brokers are not a homogeneous group. They're very entrepreneurial. They've got their own niches and so on. I think the strength of brokers is that they'll be able to learn about this opportunity and do something with it. It doesn't mean you have to go all the way to the program level, which is what we did. You know, writing our own program and then shopping for an insurance company to provide the capacity and the underwriting for us. But this opportunity, just like you're thinking, and I'm going to go off topic, sorry. I'm going back to the question before because I'm still thinking about it. just like you're sitting here determining what your digital strategy is, where you'll move, where you'll invest, how you're going to enter that world, so are your commercial clients. And so it becomes important to understand that it almost becomes incumbent upon brokers in the commercial side to understand the strategic plan of their larger commercial clients, because the commercial clients are doing exactly the same thing, and they're entering digital space, and they're doing things differently, and they're delivering products over the internet to the United States and around the world and so on. And so the capacity to understand them as well as yourselves is a big one. So now I'll move to personal and to engagement. 16 to 24-year-olds are their own group. I'm not in that group. And so the opportunity to engage with 16 to 24-year-olds in a meaningful way rarely occurs over the telephone. And so if you want to have engagement, and we do have a lot of engagement, because we deliver messages every 10 days over a mobile app to our clients, we talk to them every 10 days. And therefore, we have an opportunity in that every 10-day engagement to add anything, to talk about anything. And we have such a level of engagement that what we add or include may have nothing to do with upselling, cross-selling, anything like that. What are the most common vehicles for 16 to 24-year-olds to buy and insure? What are the, you know, whether that's from safety, cost, and so on. So there's an opportunity to engage with them around billing information, around safety. And of course, Ingenie has taken the whole social conscience of the internet, because kids care that you're being environmentally friendly and that you have a social conscience. And so our goal is to make them better drivers. Plain and simple, we took the large lofty goal, make them better drivers. Talk about road safety, talk about learning how to drive when you're still in a learning mode before your habits are set. So we have lots of opportunity to engage with them on a whole variety of things, to the point around, is the CRM dead? No, in fact, Ingenie, the Ingenie community, as we call it, expects Ingenie to be part of that community and expects us to interact on a regular basis, and so we do.
So I guess, Colin, maybe probably the last segment, we're down to 2 minutes. Any thoughts on engagement and some of the opportunities for brokers with this?
Sure, absolutely. I think the opportunity now exists going forward to engage more with your customers. And certainly from the traditional model, we talk about 2 or 3 times a year. If you get into an Ingenie type model, you're talking maybe 2 or 3 times a month. That there's a reach out to your client. We've heard this morning that the reach out has to be meaningful. There's a cost associated with reaching out to your client, so as long as it's actually beneficial for your business, then there are certainly plenty of opportunities to do so. It could be an automated reach out, it could be on specific subjects, but as a customer, if your broker is reaching out to you, as Ingenie does, and says to you, if you change your driving patterns, it could be worth X number of dollars to you, and it could also save your life, or however it works from a safety perspective, then that is of value to your customer. So I think there's going to be plenty of opportunities in the future to look at trying to use the data that you have access to look at different ways to add a value proposition on the communication that you actually reach out to your customers with. As we all know, we're all getting emails about you know, what type of water you just bought, and you can buy a packet of chips with it. You can hit the delete button pretty quickly, you get fed up, and then you just associate. So it really has to be meaningful, and you have to add value as you go forward.
I'd like to just take the opportunity here to thank Clinton and Colin, Debbie, Kim, and Hugh for their wisdom in this. I'd like to thank Orbit for giving us the opportunity to be in front of you and to thank you all. And I'd just like to add, for some reason, this CRM dead thing is just making the rounds too much. So I'd just like to leave you with my thought on that, and that's To paraphrase the Reverend Frank Zappa, who once said about jazz, CRM is not dead, it just smells funny.